Let's get into this market picture now, and things have certainly been a little bit topsy-turvy this week, but some positivity today if one takes a look at this market picture. So the Hang Seng and the Shanghai Composite out in China doing their bit there, gaining ever so slightly 0.5% for Hong Kong, despite that law coming into effect now that creates a little bit more security for Hong Kong. Unfortunately there, the situation flaring up, 1.4% higher for the Shanghai Composite. It's red, however, all across Europe, with the FTSE 100 out in London going down 1.1%. The biggest loser though was the DAX out in Germany, falling 1.2%, 1.66, sitting at 12,106 points. On the local bourse, well, following that European sentiment, we're also down 1.23%. Unfortunately, the biggest losers today seemingly coming from the financials or the banking stocks in particular, them going down 1.65% so far in this afternoon trade, 1.5% down for the resources shares as well. But the gold index has remained at safe haven, so going up 0.85%. Of course, we did see what is the best quarter for South Africa's JSE index, that is the JSE All Share, going up 22%. It's the best quarter the local index has had since 2001. So that's nearly 19 years or so that South Africa has had a really great instance when it comes to the gain in the market. But let's remember that global markets, particularly emerging markets, had fallen nearly 34% between February the 12th and around March, the end of March, that is. So that gain in the second quarter, should I say, isn't really much to write home about when we haven't really recovered yet from the highs that we had previously sat at as well. The JSE All Share is actually the 8th of 93 major indices, followed by Bloomberg in terms of how much it has gained so far in that second quarter. So some good numbers there, despite it going down in this afternoon trade. On to then the commodities board. Brent crude managing to tick ever so slightly higher there. A good number there, 1.8% to the good for that. $42.01 a barrel for Brent crude. Platinum and gold, unfortunately, not managing to maintain any sort of gain on that front. It's $1,777 a fine ounce for gold. Platinum's at $808 an ounce. And then onto your currency board, well, slight better picture then for the local currency. 17 Rand 28 cents against the US dollar, 19.34 for a euro, and a British pound will set you back 21 Rand 39 cents. Let's have a chat then with Makwe Masilela from Makwe Fund Managers as we get a sense of this market. Your sentiments though, Makwe, you get this market going one way and another way, but then that second quarter was a complete recovery for not only the JSE All Share, but really markets across the globe as well. Is that sustainable?
Hopefully it will be sustainable, especially with the JSE, as you said, it's been up, almost 22%. And now for us, making sense that it's been driven mainly by a likes of Anglo Gold, which is up over 50%, to a likes of Goldfields up 66%, and also the likes of Naspers. And it makes sense because people have been worried about coronavirus. So as a result, they continue to see gold as a safe haven. Hence, we see our control well. And also the likes of Naspers, which happens to be a heavyweight on the stock exchange, weighing almost 20%. It's up almost 24% for the quarter and benefiting from the likes of Tencent, where they own just over 30%. As we know, that company managed to benefit from the likes of online shopping and also online gaming, especially the likes of Fortnite. So if the lockdowns continues, if people continue to be worried about the global recovery, as we've seen the new infection coming in, then chances are gold will continue to go up. People will continue to rush to gold as a safe haven, and our gold stocks will continue to go up. But I think this whole picture, the way it's playing out, is you check stocks that they tend to be benefiting when it comes to the easing of lockdowns, and gets to be separated from the stocks that otherwise will just be doing okay. So when people are excited seeing the lockdowns, the easing happening, then you see certain stocks going up.
Yeah, never waste a good crisis, as they say. We saw Anglo Gold Ashanti, which is now leaving South African shores and selling off its mine as well, then to Harmony. Plus, we saw Goldfields. They were the leaders when it comes to the resurgence in the JSE All Share in the second quarter of the year. We also then saw Anglo American seeing some positive numbers as more stimulus, of course, pumps into the market. So they're seemingly enjoying that. Are the resource shares the way to go at a time like this, though? They haven't been the flavor of the month for quite some time.
Yeah, I think, if you check, especially what happened today with the manufacturing or factory activities, from France to UK, also in China going up, even the unofficial one, the private sector one in China going up today. And yesterday we had the official one going up. And back home here, you check the upside PMI, is almost at 43. So if that has to be sustained, then it's a different story, because now it tells you that the global economy is gradually coming back. Yes, we cannot define whether it's going to just be a straight way up or not. But now, should that be the case and be sustainable, then it means there's going to be continuity when it comes to demand of the resources. And we know back home here that our major consumer when it comes to our resources, the likes of China. So should China continue to bounce back, then definitely one can be hopeful that it will be sustainable. So, but I think the biggest threat, Rabila, continues to be the new wave or the second round of infections. And we're arguing that, listen, should it happen this time around, governments are better prepared. Should it happen, liquidity is already in the market. And with this excess liquidity, that money has to find space somewhere. And emerging markets will continue to benefit from that excess liquidity, whether it's from governments themselves or also from the likes of central banks. But the situation with Hong Kong as well continues to be, I think, deserves to be watched. As we've seen that yesterday or Tuesday, they managed to pass over that legislation. And today they had their first arrest. And we had the comments coming from the UK foreign minister that this cannot be right. And we know that the US is busy rolling back that special status that it has for Hong Kong. So that continues to be another threat.
Makwe, what happens though in an economy like South Africa, where one would have seen the lockdown happen, that come and go, but you still had Stadio still enjoying the fact that schooling seemingly went well. They had a whole lot more people coming to their offices and their schools as well in the last financial year. So seemingly a good bet to have split.
By all means, and I think those are institutions which are better positioned when it comes to online, learning, and they continued, compared to our public universities. And as you said, hence they've managed to see almost a 10% increase when it comes to the enrollment. But yes, they had only 51 students who specifically left because of COVID-19. And also when it comes to the collection of fees, it's up almost 6%, which is a good thing. But yes, they did also feel the impact of COVID-19 because they've got a Centurion campus that was supposed to open in 2021. It has to be delayed up until 2022. And they expect their profits to fall by all time. So it's some form of impact. But yes, generally, I think so far the guys have been resistant. It's a question of how long will this whole situation be with us. Then maybe that's when we'll start seeing serious casualties.
Yeah. Makwe, appreciate the time. Thank you so much for that. Makwe Masilela from Makwe Fund Managers helping us unpack that market picture. Even the likes of Stadio coming out with their earnings today looking much better than perhaps some may have even expected. Well, that ends things for me here on Point.